Hello everyone, welcome back to Infinity Wealth. First of all, I'd like to say a big thank you for following our channel. It's been a long time since I've done an update on the property market. The reason being is I've had quite a few health issues, and I felt that in myself I needed to focus more on me and to try and resolve some of those health issues that I've had. Thankfully, the doctor has now just given me the all clear, and I'll have to have regular checkups with the hospital. But everything is fine, so no need to worry. But it also took me back to a situation where, sometimes in life you're thrown a spanner. And it's how you deal with it. With me, it came as a complete shock. I dealt with it how I usually deal with it, head on. I confronted it. I'm a great believer in self-healing and also in taking, the right health steps as well. So you probably noticed I've lost quite a bit of weight as well. But I'm healthier for it and I'm fitter for it. But once again, thank you. Okay, so let's get back to the property market. Okay, so what's been happening since we've been off air, basically? All right, so there's been a lot in the press. If you look at what the press has been saying, property prices are going up because of stamp duty being reduced. There is and there's been a pent up demand due to COVID, so buyers who have wanted to buy haven't been able to purchase, and now all of a sudden they're let loose. And so what you tend to find is, the number of completions tend to rise. It's natural because people have been cooped up and unable to actually complete their transaction. So that's a normal thing. Now, as far as stamp duty is concerned, stamp duty, that has done is, with the reduction in stamp duty up to £500,000, which is great news for first-time buyers or house buyers. Investors will still have to pay, but they have to pay that 3% only up to £500,000. Unfortunately, we still have to pay a bit, but at least it's been reduced. So that has forced more people to come into the market. Now, I want to take you back to the last time stamp duty was actually raised for investors. Now, during that particular period, I was looking at a few London properties and in Harrow and those areas, and all of a sudden, where a house should really be worth about £500,000, people were rushing to buy this house, and they were paying over the odds to actually try and purchase it before and complete before the end of before the new introduction of the additional 3%. Now, at this stage, I remember thinking, I'm not going to chase it. These guys are overpaying, and any savings that they were making in the stamp duty, they're now overpaying in the purchase price, which doesn't make sense, really. So in the current market, the way it is what we will find is that as the recession carries on, and it is carrying on, it's now confirmed that we have got a recession. As that recession carries on, you will find that house prices now did gradually start to peak out and begin to come down. In the north, there's been a huge rise in number of people looking, mainly because of the yields that the north offers. Northern properties offer great yields, and a lot of southern buyers from London and the southeast have ventured up north to find those property deals, basically, to get a better return for their money. Now, that has forced up property prices in certain areas. Manchester, has been on an absolute tear for some time. If you look at the Manchester skyline, there's cranes everywhere, which reminded me of a little bit of London. There's a buzz about Manchester, and it's great. It's a great city. There is a real buzz about Manchester, but it reminded me of London and the ups and downs that London has had. I remember during the peak time and peak cycle, there was loads and loads of cranes up in London. All of a sudden, none of the flats could sell, and there was a slight correction in the market. And this is what I'm anticipating this time. I am anticipating a correction in property prices. It's only natural. Why is it natural? Well, first of all, we've got into a recession. We're in an unprecedented time where we're in a recession or entered a recession, and yet some areas the property prices are rising. Now they're rising because obviously of quantitative easing, interest rates coming down, and that's what they say, interest rates coming down, but in real terms, in real world situations. So I've had a lot of friends who are looking to reevaluate and also release some equity from their portfolios, keep in readiness to pounce if there was deals around that they could find. Now, what the lenders have done is that they've tightened up their criteria. So although we're saying, interest rates are low, if you in real terms, if you go to lenders, they don't seem to have actually reduced their interest rates as much. The other thing is their loans to value, the surveyors are going out and actually down valuing properties at the moment. So if you are in the middle of a flip, don't be surprised if the valuer comes in and actually down values it. The main reason why is the mortgage lenders want to be safe. They want to make sure that they're not overvaluing it. But in the same vein, you have to make sure that they're not undervaluing your property, right? And that is what's going on. So I think those effects will actually come on board. There are people with cash that are buying. Now, I've been following, even though I've been out of action, I'm still following the property market, and that property market, in the auctions, there still seem there's a lot of online auctions, which you guys can now go to, right? There's a lot of online auctions that you can see as well, and seeing what the bidding is happening. So all the major auction houses, that's what's happening. With the tighter lending rules that are now in place, what you'll tend to find is as those restrictions get tighter and tighter, the property prices will come down because there's fewer people that actually can afford to make those moves, basically. So some of the bigger deals, I know for a fact that some of the bigger deals, there's some developers that are actually selling off where they've had planning permission given to them. The reason why is because in this current market, lending criteria being quite tough, they are not sure, and so it's better to actually still make a profit because they've managed to get the planning and to sell it on. Now, for smaller developers, that's great because you may be able to find it. That's not to say there's no deals around. There's always a deal around at the right price. A deal is only a deal at the right price. So stay alert in the property market. I'll be doing regular updates as well. So this was just really a very brief overlay or outlook on what is going currently. Obviously, there's new planning rules that have come into play as well, which will help tremendously. Some of those new planning laws are that you can actually build another floor on top. So you've got bigger developments where you've got blocks of flats where you can actually build on top, which is great. So you can do another story. But obviously, some of those prices are now reflecting that additional story building. But there are lots and lots of opportunities, but you have to be mindful of opportunities. And opportunity is only there and only present if you can see it and it's at the right price and you can add the correct amount of value to it. So stay alert, guys, and I hope you've been safe throughout this whole period, and I look forward to doing the next set of videos. And again, please tell me on what you're looking for in some of your deals. So are you looking for me to actually expand on what sort of deals to look for? Right now, London is a buyer's market. Having said that, I am hearing that people are actually not overbidding, but they're pushing the prices up a little bit. London, the other thing that's affected landlords at the moment is the eviction rules as well, which has meant that a lot of landlords are actually staying fast at the moment because it makes it difficult to actually, if you've got a tenant, and some tenants are, I hate to say it, taking advantage of these laws, even though they can pay it. They're not paying the rents to some landlords. That's what I've heard in the market. So it's picking the correct correct tenant to put in the property. So they're honest, they're going to pay the rent that is due, Rents in London have been falling because there is less demand, especially for HMOs. You've got to be careful about HMOs in London and also in certain areas as well, because the number of HMO empty spaces available for HMOs is growing. All due to COVID, because of the lockdown. HMOs invariably house people who are working in the service sector. The service sector has suffered. Hotels, restaurants, shops, places like this. So it's made it difficult for people to actually, go back to work. Yes, they are on furlough. And they are getting furlough, but what about when furlough ends? Are they going to get their jobs back? So this is the great unknown. In the great unknown, I always say I'm prepared to take a risk, but only if it's worthwhile taking that risk, i.e. if I'm getting a good price to actually offset the risk that I'm taking. So you've got to be mindful of that. Okay, let me know, in the comments below what you're looking for. And what I will do is I will do a series of talks for you on that topic. So just give me the sort of topics that you're looking for. Above all, stay safe, guys. Thank you for supporting the channel. And I look forward to doing more of these videos now that I'm back. Thank you. Bye.